Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk more about the market maker method, which is actually one of the institutional trading methods out there, or even we can even classify it under the smart man concept or the trending SMCs. So this methodology actually looks to incorporate what the large institutions are doing within the market. With that in mind, we actually follows how they manipulate the market and tries to catch those impulsive moves that will be created with those manipulations. So the market maker method actually looks to have what we call cycles. So basically a cycle is actually a move that will actually lead to a reversal pattern, right? So with that in mind, we have what we call levels or impulsive moves. So these levels actually come into place because there are external authorities that governs how the markets move. These external authorities includes the International Monetary Fund, the World Bank, that actually monitors if there are no currencies that are being devalued. So with that in mind, they will restrict movements of the market in one literal direction for a certain magnitude. So what we are trying to say is there are people who have access to large amounts of capital. Those people, if ever they participate into the markets, they actually can alter the demand or the supply of a particular currency in their pairings. So with that alteration of the demand or supply, we actually have sometimes more demand for a certain currency that will actually increase the rates or the rate of that particular asset. So increment of rates will actually involve presentation of impulses on the market like this. So we have what we call the market maker cycle. A market maker cycle is actually a move of three impulsive moves before we reach what we call a reversal point, right? Or a high of a certain period. So we usually have 1, 2, 3 impulsive rises before the market actually reverse like this, right? So after the market reverses and before the higher time frame cycle has been completed, we usually have what we call a cycle restart, which is basically a reset point of the market, right? So in this case, if we have 1, 2, and 3, we'll have what we call a reset to restart again the cycle to have another 1, 2, and 3 moves in the same direction like this. And before the cycle is actually completed, we'll have another restart of the cycle, which becomes reset 2. So in a complete higher time frame cycle being viewed in smaller time frames, we'll have 2 resets along the way. Like in this case, we'll have, this is another reset. So let me mark this as the first reset, then the second reset like this, right? So we had 1, 2, 3, 1, 2, 3, and we restart again to have another 3 impulses to the upside before we have an ultimate reversal pattern. So with that, we now create a law that will govern us how these levels interlink with each other with tuning the time frames. So with this, we can say any higher time frame, right? Any higher time frame of your choice, consider it as made up with 3 levels of the preceding time frame. What we mean is in one H4 level, we actually expect to see 3 H1 levels in the preceding time frame. That's actually H1 is the preceding time frame of the H4 time frame. In one daily level, we expect to see 3 H4 levels, and in one monthly level, we expect to see 3 weekly levels, right? So the steps in counting these levels actually favors to start on the higher time frame. And of course, with experience, you can actually do that from the smaller time frames like the H1 time frame. right? So this is the model that we'll try to actually put within these markets. So this is odd against the dollar. The first step is to start on the higher time frame. In this case, this is the monthly time frame. Try to see how many impulsive moves have been issued on that higher time frame, right? So I'm going to use rectangles to mark these levels, right? So in this case, we had the first one, right? The first one, we had an impulsive move. So to explain this drop, we would say there was demand of the US dollar. That is why we saw an increment in strength of the US dollar amongst the pairing of odd against dollar. So with that demand, the market makers were in drive. They reached a point where they had to book their profits, close some of their trades due to that. Are you struggling to make profits consistently in forex trading? If yes, try out our Portal FX indicator that shows you when to buy and when to sell and sends these signals directly to your phone. This indicator does not repaint and bases on the institutional M15 cycle. Simplify your trading by getting your copy for only $100 today. Powered by Bunnex Investment Group. Restriction that I've said earlier on. Then from there, we had another drop. It was a powerful impulsive drop, which was a level as I've defined it earlier. So we had level 1 and then level 2, right? So marking the level 2, it's actually from consolidation to the next consolidation. This is the next level, like that. We had 1, we had 2, and we can see we had the last level going down, right? From there, we can actually say the market gave us 3 levels going down, or the market completed the cycle, right? We had 1, 2, and 3 levels going down, and with that, from this template, I've said we expect to see what we call a reset point, which is this point that we are anticipating as a reset of this higher time frame. So just to check, right? Just to check if we had complete levels in these levels. Let's just go on the weekly time frame to fulfill what I've said, that in one monthly level we expect to see 3 weekly levels, or 3 levels of the preceding time frame. So this is now the weekly time frame. On the weekly time frame, what can we see, right? We can actually see that there were 3 impulsive moves. I'm now going to mark the last monthly time frame because it will actually take long if I start from the very first of the monthly time frame. So we had the first drop, right? Let me tune the color to another different color. Let me use white. So this was the first weekly level in the monthly level. We can see from this point that is where we had a pullback. After this drop, a pullback, a drop, a consolidation, and the last push to the downside, right? So the next level was actually from this point plus its consolidation to that point. Then we had the last drop like that. Therefore, we had a complete cycle within this monthly time frame. So in this case, we have gone down to the weekly time frame. We have proved that the monthly cycle is complete, and this is the turning point of the monthly time frame. So to prove everything, or to show you the model that I was showing you, we can see that as we had these drops, we had these reset 1 and reset 2, and we actually reached this point to give us this ultimate reversal point. So right now, where do we go next? We move with the time frames going down, right? From this point, we can see that the market went up. The next thing is now going on the daily time frame. We need to see what happened from the ultimate reversal point that we have discovered on the monthly time frame. And on that monthly time frame, we saw that this is going to be a reset point, right? So in actual fact, we would expect to see the market actually coming back to take the liquidity that is available in this zone. But before it does that, there is something that it needs to do, right? So let's go on the lower time frames to see how that is going to happen, right? On the lower time frames, we can actually see we had the first push up, the second push up, and the third push up. So marking these impulsive moves, let me pull out my rectangle. We had the first push up like that. Then from there, we had the second push up. Usually level 2s are very short because the market makers usually leaves retail traders to be the one who pushes them. And we had the third one here. So we can say we have some liquidity in this point. By liquidity, we mean there are orders of large institutions that are hanging in there, right? So for now, after doing so, we now know the bias of the market. The bias of the market is going either to grab the liquidity that is available in this area, right, by moving down, or it's actually going to give us a bounce and continue upward. So the next point that we are now interested in is this point. What is happening from this point going up? We can only see that with smaller time frames. We have seen that the daily cycle had a completion as we were going up, right? But then after completing, we saw a reset point, which is this one. It's still a perceived reset point. So what has happened from the reset point to reach the liquidity that we have seen on the higher time frame, right? Now going on the H4 time frame. On the H4 time frame, from the liquidity point, we can see that we had a push, some consolidation, a push, some a pullback, then the last push, then a reset, which was deep, then a push, consolidation, a push, consolidation, and a push. So what are we expecting right now? In normally within our methodology rules, we are expecting to see a reset, which is a reset number 2, so that we move towards the point of liquidity of the higher time frame that I have shown you, right? So let's mark the levels as we will be going up from that point of reset. We had this push. Let me change the color again to a different one. Right, so we had the first push. Right, so from this, it becomes a little bit confusing to someone. Can we count this as a level or can we skip it? Right, with that in mind, we now define that a level is something that usually do not retrace for more than 75%. So in that, with that rule, we can actually, or we can safely say that this was a push, right? But this one was not a push that can be deemed a level. Why? Because the market actually retraced back almost 100% of this push. Therefore, this was a consolidation phase. Therefore, we skip that and start on this one. I hope I've made it clear. We made a push that retraced 100% of its push, right? Like that. So we had 3 levels that actually ended at this point, 1, 2, and 3, and we had a reset, right? From that reset, we can see that we had the first level that was issued here, then the second level that was issued here, and then we had the last level to make them 3. So reset 1, we are now anticipating reset 2, right? Where is reset 2 going to occur, right? So there are 2 scenarios. Either we are going to be issued a reset, or either we are going to go down back to the first point, because we have the first point of liquidity that is available to us is actually this one, right? The second point that has liquidity is this one, and the third point that has liquidity is this one. Now logic will now kick in. You now have to be able to think in binary. If this occurs, what else will this will occur, right? So going on that H4 time frame, we now want to see what has been happening. On that H4 time frame, we can see the market actually came from this point, gave us 1, 2, and a choppy third level drop, right? But we anticipated that this was going to be an H4 reset. The market went up and gave us a reset in this direction. Right now, I have a short on odd USD that is going downwards. So within that short, we have been issued the first level consolidation, and this is somehow a second level, and we are expecting to see a third level. So with that in mind, we may say our reset may occur around this point or around this region where the H1 cycle would have completed. So from there, it's now up to us to see if we are going to be given a reset, or if we are going to continue to have a reset going downwards, right? It's now when logic actually kicks in, right? I hope you've seen how to count levels and what the market maker is. So there are some concepts that I haven't reviewed. The concept of where the resets will occur, the concept of the patterns that you need to be looking for within the moves of the levels, and the concept of the risk management, how to screen and how to intraday trade. So those are actually found in our advanced course, and it's actually going for $85. You may actually talk with us via the link that I'll leave down in the description below. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.